morning. Good morning. Hope everyone's having a very productive morning. Welcome to episode 12 of Millionaire Brand Creation. I'm your host, Michael Banovac, and today we have a very special guest. We're going to talk about something that a lot of us don't really want to talk about, but unfortunately, it's part of our everyday lives as Americans and as citizens. We have to pay our taxes, which we don't really love to do. But as you start making more and more money, a lot of it comes to planning. A lot of it comes to making sure you're in the right arena with people that are very successful, the arena of people that know the tax code. And that's why this episode is entitled Staying Out of Trouble with Uncle Sam, Your Least Favorite Uncle. So without further ado, I'd love to introduce you to a national tax expert. He got his master's in taxation at Arizona State University. He's also accredited with the Internal Revenue Service. And he has helped he's helped thousands of people solve tens of millions of dollars worth of back IRS problems. So without further ado, I'd love to introduce you to my good friend and business partner, R.C. Thornton. R.C., are you on?
I'm here. How are you doing, Michael? Good morning.
Good. How are you doing? So
Good, man. Very good.
If you could take us back briefly, I know a lot of people want to jump into the tax game. But how did we connect, and what are ways that you can help people initially make money so they have tax problems to begin with? Because the more money you make, obviously, the more you don't want to give to Uncle Sam.
For sure, for sure. Well, Michael, you and I met back in high school. We were 14 years old, and we met on the football field. You were like part of the football team doing something there, and I was in the student council taking photos of the game. And it was like halftime or something, and I just got chatting with you, and I just really realized very quickly, like, wow, this is a really smart guy here. And kind of the big claim to fame where I really in my mind cemented our friendship was we had a class together, and we were 15 years old, mind you, and you were talking to the class about saving a nest egg for retirement. I don't know how many 15-year-olds talk about IRAs and Roth conversions, but man, that was right on the top of your mind back then. So I'm like, this is a cool guy. I better keep him around.
Well, and vice versa. You have the mindset of success, and that's why I wanted to bring you on, because I know you have a lot of real estate agents that you help across the United States, and we have a lot of agents that we help locally that are partners, here with us in EXP and beyond. But to lead us off, like, what are some pointers people can start doing leading into April and making sure that they have everything that they need in order to be extremely successful and not get gouged by good old Uncle Sam?
Yeah, everyone's favorite uncle that we love to hate.
Yeah.
I would say, Michael, the biggest thing that I realized, especially for real estate agents, because my background and really when I got started in my career, and my main focus is helping people with substantial back tax problems. And we have a lot of real estate agents as our clients. And that's kind of how I got started, was exclusively serving that market. And I think I've realized that the number one thing people do wrong is they ask the wrong questions when it comes to taxes. I get calls from people, they're like, RC, can I invest in this retirement account? Can I like buy this car and write it off, or should I lease or own it? All this kind of like, technical stuff. And I asked them, I'm like, well, do you have tracking in your business? Like, do you even know how much money you make? And they say, no. And I say, well, so you don't even have tracking. You don't even know how much money you're making, but you want to get all tricky on me here. So I advise to everyone, and especially here at the beginning of the year, you really have to master the basics. You really need to be constantly, every single day, tracking the income and the expenses in your business down to the penny, so that you know exactly how much you make. You can't even, let's not even talk about saving taxes, but you can't even comply with the basic tax law if you don't even know what your income is. And I know it sounds like some, almost eye-rollingly simple advice, but I can tell you, I think most people don't even do that minimum. And if you don't do the minimum, you can't do anything else. So here at the beginning of the year in January, really resolve to get on track with like QuickBooks or some sort of tracking system in your business so you can know exactly what your income and your expenses are, and start this year fresh to stay on top of it.
So for people just starting out, I think the reason most people are broke, let's just be honest, is they don't even know where they stand. I think one of the things that you and I preach is tracking your net worth, tracking your cash flow statement, money's coming in and out. What are some daily rituals and almost habits that people can implement every single morning or every part of their day to where it just becomes second place? What can you recommend, and what do you do?
Well, I can tell you what I do for myself personally is I wake up in the morning and I always look at my QuickBooks. I look at my exact income and my expenses in my business. And I'm always thinking ahead. I'm thinking about what other cash flows are coming into my business, what other cash flows are leaving my business. So I can always anticipate that and be on top of it and see how it ties into my overall approach. But to do that, I mean, you have to, of course, that means you have to have that kind of tracking set up in your business in the first place. So you got to
Mhm.
always know where you stand in business. There's no ifs, ands, or buts about it. And if you're flying blind, man, you can't do anything else. And you're going to have a big problem with the IRS at the end of the year.
So after taking careful notation, obviously, what can they do in 2021 if they have, let's say, 3 more months to file taxes till April 15th? What if they haven't done that up to this point, and they need to make sure that leading up to it, they're saving as much as they can, or they're doing the right things moving forward? What would you recommend?
Yeah, well, I would say for people who are real estate agents who are self-employed, I mean, number one, get QuickBooks set up, get all of your old bank statements or your online banking loaded into that puppy as fast as you possibly can. And then figure out where you exactly stand as far as your income. The biggest thing you can do, like after the fact, so let's say, it's January 2022, you can't go back in time and write off more stuff, right? Because the 2021 is already over. But the biggest thing you can do is to consider pumping some cash into retirement accounts if you have it, because there are provisions where in the 2022 you can pump in money for 2021. If you're looking at this thing and you're like, dude, I owe more than I want to owe, if you have some cash available, I would highly recommend throwing some money into some retirement accounts, either like a traditional IRA or a SEP IRA, because some of the different types of IRAs you can put in more cash than just like a traditional IRA, which I think the limit's like 6 grand, 6,500 or so.
And so for people that are starting to do well, let's say they joined EXP and they're really starting to make a lot of commission checks. What are some
Mhm.
ways that we can do some stuff for them? And then we'll answer Lisa's question right after this.
Sure. Yeah. So you joined EXP, which by the way is a great decision. And I'm not just saying that because I have some big bias towards it. Like I said, I've worked with a lot of real estate agents, and I think I kind of have a unique perspective because like I see behind the scenes of what's going on. Like I have people's tax returns, right? I know what money they're making or not making and where that money's going. The number one problem I see with real estate agents, particularly high earning real estate agents, is a lack of net worth generation on the back end. I see people all the time that are making, two, three, four, five, $600,000 net in their business, and their net worth is like nothing, right? Because it's money in, money out, feast or famine. EXP is the only real estate agent model I am personally aware of where it helps you automatically build net worth through stock purchases. And if you recruit people, you make money through that as well. So you're doing the same thing you're already doing at some other brokerage, except you're getting paid more for it. And it's in the form of equity, which is cool because that's what's going to make you wealthy in the long run, not just cash flow from your job. And Michael, you talk about that all the time. So I won't, belabor that point. But I think that's one of the really wonderful things about EXP.
Well, and I think Lisa, I don't know, Matt, if you could put that comment up that Lisa Reyes had. Yeah, this is real. Okay, so there is a real estate income outflow online service called My Realty Zam. It keeps track of mileage expense in all categories and everything you do as an agent. It's very affordable. So that's a
That's
great
awesome.
example. Yeah, I mean, the key, I think the first thing we all would agree on, RC, is tracking as far as the IRS, making
For
sure
sure.
you know dollars and cents exactly as they stand, right? So
Precisely
as
right.
so for 2022, let's say people are making on average, let's just say $50,000 a year in gross commissions, right?
Mhm.
What can they do moving forward in 2022 where maybe there are some things they can set up, maybe an LLC, maybe a PLLC,
For
maybe an
sure.
S corp? What are some things they can do to really start ramping up for the year ahead?
Yeah. So number one thing, I mean, tracking, like we said. Number two is set up an LLC. If anything, just for your own liability protection if you ever get sued, which could happen someday, right? Get an LLC set up. But if you're making 50K, your number one focus is making more money. It's not getting tricky with taxes because if you're making 50K gross, your net's probably around 35, 40. You got to pump those numbers up. to get to where you really want to be, because all the tax saving stuff, it plays in the margins, right? So if you save an extra 10% of you owing $10,000 in taxes, yeah, you can save $1,000, but what are you going to do? Pay a CPA or an accountant like $4,000 to $5,000 to do it? Get those numbers up. When you start to get your commissions, or I would say your net income in your business around like $80,000 to $100,000, that's when you can start having some fun. And that's when I would take that LLC and consider converting it into an S corporation. Because when you have a corporation, you're no longer self-employed. And if you're self-employed, you're getting taxed at the highest possible rates. I mean, if self-employed people get reamed with taxes, you have income tax, self-employment tax, and a bunch of other stuff too. But get that income up higher before you get too tricky. Once you're at around 80, 90K net, then we can start getting a little trickier and try to save you some money.
Now, I know your income has skyrocketed in the last couple of years since we've been doing a lot of business together because we have similar mindsets. But for people, let's say going from 50 to 100K, what are some things that you recommend doing in their business for them to increase their earning power?
I think, well, for like the agents, and like I mentioned, I think one thing I'm really blessed to have is I see behind the scenes of all these agents out there. The ones that I know that are making a lot of money always have a niche. So either they're really good at some particular thing. They're not just like, I'm your agent from Ahwatukee to Chandler, north, south, anywhere around town. They have like a specific thing they're doing, either like a luxury, for example, or they have some neighborhood or whatnot that they know very well. Because when you niche down, you can kind of like speak out to your specific target market. The other thing I see is people that run teams. Most of the agents that I work with that are making multi six figures net all have teams. They all have agents working under them because it's just impossible to make a lot of money by yourself, right? You need a team of people to help you be successful. So I guess if you're trying to go from 50 to 100, I would say niche down. Like define your mountain and be the king of your mountain. Don't just be yet another generalist agent out there doing the same thing everyone else is, because then you're not really offering unique value and you can't be compensated extraordinarily for it if you're just average,
Now, here's another question. I know we talk about one of the biggest wealth creation vehicles as far as taxes and what we've done for you in the last 2 years after you've kind of followed my system. How would you recommend the best placement of capital from earned income into passive income assets? Can you describe what you've done in your life in the past 2 years to help grow your net worth?
Yeah. And Michael, I mean, you coached me on this, and you made me a true believer in this concept. I really believe that you need to take your earned income and try to convert that into passive as quickly and as much as you possibly can. And a rental real estate is absolutely the way to do it if you do it smart and if you do it in an intelligent, structured way. And my wife and I, that's what we've done over the last couple of years. We've worked on acquiring more property, not only to live in, our home here, but also for rental purposes as well. And what I mentioned to you before, that self-employment income is one of the highest taxed. Rental income is one of the lowest taxed. So basically you make money, you pay less taxes on it, and you have someone else building your equity for you. And it's really just kind of a win-win situation on multiple fronts. So absolutely. I mean, if you're an agent, you're making good money. I mean, if you're uniquely qualified to execute this because you're already an expert in the market, I think all agents should be doing that.
So from a tax perspective, you think it's a very smart strategic move to basically convert, let's say, their $50,000 to $100,000 a year in income and maybe buy their first personal residence or buy property as they accrue more money and make more income through the idea of rental real estate.
Exactly. I mean, it's a short-term cash flow play, but also which to me, the more interesting part for me is the long-term wealth creation play. It's kind of like EXP, the same model. You have that equity you're building on the back end through the stock and then the cash flow in the short term. You have both with rental income and rental property.
And it's duplicatable. I mean, you can do it. I mean, how often are you and your wife planning on buying rental property over the next, it's several years?
Our goal is, every few years, try to get something else. And I think, Michael, the way you've taught us how to do it, which is to try to find a property in a really good location that is something that needs some work to be fixed up, is absolutely perfect. I mean, we've seen a lot of appreciation in the value of that, all of which is tax-free until you sell it, obviously. Yeah, I mean, I would recommend all agents who are at least, making, 100 grand a year plus, absolutely get on that train.
So let's say you're behind the eight ball, like some of your agents are, and they call you and they say, "RC, I owe the IRS, let's say $100,000 plus, and I haven't filed taxes, or I don't know a lot about my tax code." What would you tell them to get started? What are some of the
Yeah,
things they need to do today?
that's a great question. Number one, and I don't want to get too philosophical or anything like that, but this is by far the most important thing is, dude, you got to address your money mindset. Like for someone to have gone so long that they owe 100, 2, 3, $400,000 of back taxes, there's something in their mindset about money that's not working in their advantage, right? I talk with so many. I literally have agents tell me, they're like, "RC, I am so good at selling houses, but I suck at managing my finances." I mean, think about it. Like if you identify, you say, "I, RC Thornton, am bad at money." Is it any wonder, the universe and life responds to you with a situation where your finances are totally effed up, right? You have to, I mean, like one thing I've always admired about you, Michael, I mean, even from when we were 15 years old, is you're all about thinking about money in a good way and managing it to have it be an asset in your life, not something that's a detriment. And most people, I think, either ignore money or they tell themselves they're bad at it. So you have to change your mindset to like it not being acceptable for you to be in this situation. Like you can't just make an excuse, "Oh, I'm an agent. It's feast and famine." Like, "Oh, I had this big bill on marketing I had to spend, this Zillow leads or whatever. I guess I'm not going to worry about my taxes." You can't tell yourself that. You have to do your taxes first and take pride in being in control of your finances. So all agents, man, you have to shift that mindset that you have about money and taxes. And the reason I say that is because if you don't do that, we can negotiate with the IRS, but it won't matter because you're just going to owe more money to the IRS next year and the year after that. So there's no point. It's just an ongoing cycle, unfortunately.
So obviously you can't name names or anything like that, but can you tell us a couple stories or some anecdotes of clients?
You still there, Michael?
Looks like he might have popped out for a second, so we'll give him a moment to come back.
Perfect. Yeah, I'll hold my answer until he asks the rest of his question.
Can you
You
tell
there,
us
Michael?
some anecdotes of clients that you've had and how how you've garnered success for them and some of the things that you've seen that they've changed in their life?
Yeah, for sure. Let's think of some that we've had recently. I mean, for example, I have some clients right now. They're in the Midwest. They own a very successful real estate firm, but they also owe like $800,000 approximately in back taxes, and the IRS is all over them. And so, what we've been able to do for them is really kind of negotiate, restructuring, helping them restructure their finances and know what their obligations are, but also kind of to restructure their debt to be able to pay it off faster and at a lower interest rate, and making it more manageable and to try to get the IRS off their back. Um, we have agents that owe $300,000-$400,000. The IRS is going after them, and we really just try to approach the IRS and say, okay, well, I mean, what's some reasonable amount of money that the client could actually afford to pay in that's not going to ruin their business? Because if you have that kind of problem, unfortunately, the IRS is just going to say, like, liquidate everything you have and pay us. But that doesn't work for most people because they need to live their life, right, and grow their business.
What are
I don't know
some
how
of
much of
the
that you caught
mistakes
before
that
it
you're
fell out, but what's
seeing?
that?
What are some of the mistakes that you're seeing as far as, are they spending too much money on their primary residence? Do they have high lease payments? Like, what do they have that you're seeing
Just
as a
spending money
common
on
trend?
crap. I mean, me and my staff, we go through clients will send us bank statements as part of this process, and we go through it. And we sit there sometimes and we're just thinking, like, what the hell are these guys spending money on? I mean, it's just, $1,200 a month cars, $10,000 a month credit card bills, just crap. And it all
So they're
harkens
going
back
out
to
to dinner
tracking,
a
right?
lot. They're going on trips. They're spending money where it's not garnering them long-term wealth is basically what you're saying, correct?
Yeah. But the funny thing is most people tell me, like, they're like, "RC, I can't afford to pay the IRS." Like people tell me that. And I look at their bank statements and I see, $300 dinners, credit cards and all that, which I mean, I'm not here to judge, like live your life the way you want to live it, I guess. But the bottom line is if you're making decent money as an agent and you have a tax problem, you're probably overspending on a lot of personal expenses.
So here's a question. So I know agents that are doing well in the business and are in the business, let's say 5 years plus, right? And they break that multi-six-figure threshold of GCI. What do
Right.
you recommend to them, and how can they really start planning in advance as far as making sure they owe the IRS the least amount and they can put their money towards what matters for net worth accumulation?
Certainly. Yeah. The biggest thing for people at 100 grand plus, set up an S corporation for your business. And I won't go into the technicalities of what that is, but basically you restructure your business so you're no longer self-employed. You actually are an employee of your own business. And the advantage of that, like I mentioned, being wages and self-employment income are the highest tax form of income out there. And if you set up your corporation, you can take money out of your business that is not self-employment or wage income. You can take distributions or dividends on your profits. And the difference between, what you take out of your company versus what you pay yourself can amount to a pretty substantial tax savings. And then you
Like,
multiply
give us
even
an
the,
example. Like, if I'm making $100,000 a year, walk us through if I was a self-employed person versus an S corp. What are some of the type of savings I might see?
Yeah, great question. So if you're self-employed, you're probably and you make 100 grand, right? You're probably gonna owe like $30,000 in taxes to the IRS, give or take. And the reason for that is because you have not only your income tax, but you have self-employment tax, which is another 14% on top of the income tax you have. So that's going to net out to around $30,000. Now, let's say you set up an S corporation and you say, well, I'm going to pay myself a salary of $60,000, and then I'm going to take the other 40,000 out just as a distribution, as a dividend. So that, those employment taxes that I talked about, that 14%, only get charged to the $60,000 that you pay yourself as a W-2. The other 40K you can just yank out of the company and you only have to pay income tax on that. So, I mean, my mental math isn't sharp enough to give you that exact number, but I mean, that's a 15% savings on $40,000, which is, what about $6,000 or so,
Six K
something
a
like that.
year, yeah, just off the
Yeah, you
bat.
multiply that by however long you're in business, and that's a lot of money you're saving just by doing it that way.
Mhm. So the biggest thing, I think a lot of people, and I'm sure they ask you this too. Oh, I need an S corp. I need a PLLC. What you need to do is focus on your income first. Would you
For
agree with
sure.
that?
Yeah, I mean, in my client base is a graveyard of people that tried to set up S corps, didn't make enough money, didn't do it right, and then they actually made their tax problem worse because they have not only do they have personal income tax problems, but surprise, now they have corporate income tax problems and payroll tax problems. You don't want to undertake that unless you're ready for it, man, or you're just gonna be in a world of hurt.
So
So yeah,
let's say
get
if
your
you're making $150,000 a year consistently, then definitely go over
for
to an S
sure.
corp. But if you're
Absolutely.
not
Because
and
then
it's inconsistent, stay where you are. Is that what you'd recommend?
for sure, you got to focus on upping your income first. All this other stuff isn't going to do anything for you unless you actually are making decent money.
Or they really like kicking me out, don't they? Well, that's good. Are there any comments in the section, Matt, that we can ask for the
There's a
audience?
couple.
Any
Let's see.
specific LLC or tax comments?
Let's see. Anyone have a question they want to pose?
Anything you guys want to know tax wise, I'm here for you.
I got a question. So, as you know, I'm building a house, right?
Mhm.
And to build this house, I probably need to borrow, let's say, one million
Mhm.
one to build this house, and I got to put in 300,000 or 400,000 in my own cash to get it off the ground.
Mhm.
What would you recommend as far as write-offs and things of that nature down the line?
I'll let him come back on and finish his question.
It seems like he's having some internet issues maybe at his house.
Yeah.
Did
So
you
you
catch
said
the
to
last
write
part?
off down the line for what, Mike?
I said, so, I'm building a house, obviously, and basically what would you recommend as far as after getting a loan for a primary residence loan?
Hmm.
Um, what do I need to do as far as tax preparation, et cetera? Because it's almost a balancing act, and I'm sure you would agree, right? It's you want to pay the IRS as much as you can in order to borrow as much as you can at these somewhat low interest rates. But at the
Right.
same token, you don't want to pay too much because if you do, you're running out of cash, and now all you have is illiquid assets, if that makes sense. And we'll go on
Yeah.
Joe's question next. Can you leave
Yeah.
Joe's question up there, Matt? Yeah, or answer my question if you could. I'm curious.
Yeah. Well, I would say, I mean, I think like really the tax savings for building property, I mean, and presumably you're not just building it to flip it, would be like
Right.
renting it out. Then you could use whatever portion of it. If you're renting out like part of it, like I think maybe you mentioned you were considering doing with like an extra part of it, you could write off the expenses related to that, which could help lower the hit overall on your.
Do you want to read Joe's question and possibly answer him
Yeah.
with that?
He's back on. So Joe asks, what about commingling funds? I have a W-2 job and I'm funding my business from my W-2 income. Is there a ramification to this? No, no problem at all, Joe. I would just say that you really need to track specifically like the money that you're pumping into your business. Make sure that you're tracking, like, don't just literally commingle it, like throw everything in the same bank account and just like pull stuff out for your business and personal. Be deliberate. And if you're going to say like, I'm taking $5,000 of whatever I made this month and I'm going to put it in my business, cut yourself a check from you personally to your business so you can track that and keep a clear trail of everything going on.
That's a good point. I mean, basically, what you're telling everyone to do seems so obvious, but it is not easy. I mean, A,
Right.
make more money and focus on making more consistent income. But B, you almost have to track your money inflows and outflows daily. I mean, wouldn't you
Yeah.
agree with that?
Yeah, it's the only way to make this work. I mean, especially when you start making any semblance of decent money, like you're going to have a problem if you're not staying on top of this. So you really should, especially Joe, like for yourself, if you're starting a business, it's really important to get on top of that as soon as possible, and not wait until you are making, six or multi six figures to do that.
So let's talk about the real high net worth producers. I mean, like, what's the most successful agent that you've had as far as income, like yearly income, $1 million a year plus?
I haven't gotten to a million yet, but I would say at least like 650 net was I think the highest one that I had.
650 net. Okay. And they're making 650 net. What is it that they're doing in the real estate business that you could see that makes them a standout, that makes them really successful in this industry?
Yeah. Biggest one, like I mentioned, the guys that I have that. So it's kind of like I have like two layers of successful people. I have like successful individual agents, and then I have successful people that run teams. The successful individual agents I see typically make like maybe around like 150 to 300,000 a year. But the people that are making more than that, 100% of the time have teams.
That's
Like
interesting.
that, then that's what it is. Like, I mean, they have, 10 to 40 agents who work under them, and they've developed their growth, of their under people agents, right? They help them grow and they basically split the revenue with them. And they also build out an infrastructure to be able to really help those agents be more successful. So they have, systems or ideas in place to help them recruit, help them on their marketing, help their business become more successful. And they just take a cut of the pie, essentially.
So really, that's why EXP model works well, is that you basically move from being an individual agent to being a team leader
Yeah.
unconsciously with the opportunity to make a lot more money. Could you answer Brennan's question?
So he says, I bought a single family home with a partner this year. How do we take deductions? Can we split it? We both put money, but that account reimbursed me. Yeah, absolutely. I have clients who do that where they buy, properties with like their parents or a business partner and they own it half and half. What you do is if it's, you just take the deduction on your Schedule E on your regular tax return and just write off literally half of the expenses. Or if there's some expense that's specifically allocated to you, you can take that 100% on your Schedule E as well.
Here's a question, for agents that are, doing more sophisticated stuff, would you really recommend hiring a CPA or someone who's really proficient in tax or like doing TurboTax and all this stuff yourself?
Yeah. Yeah. Don't do it yourself. I mean, if you're making decent money, and especially if you have a lot of like in real estate investing and things like that going on, yeah, don't do it yourself. It's the penny wise, dollar foolish doesn't get you anywhere in life. You know, so get someone who can help you proactively plan out your tax saving strategies on an ongoing basis, not just filling out numbers in
And
a
what
tax
type of
return.
accolades should they look for someone who's really proficient in that? Is there a certain like moniker or designation or something like that in their states?
No, not really. I mean, honestly, most accountants, tax professionals, CPAs really don't do a lot of proactive tax planning. They're mostly just tax preparation. I think what I would do is really like look through your network and see who you like. But when you talk to people, ask them more about proactive tax saving strategies. And the few CPAs or accountants out there that are really sharp with that, well, you'll be able to tell very easily. But the flip side is it'll cost you more, but it should have a pretty good ROI attached to it. Like if you can get a tax plan to save 15K in taxes, maybe that would be worth paying $5,000 for.
Here's another question. I think people, this arises quite often is obviously as we earn stock for EXP and doing what we're doing in our businesses, what tax ramifications do they have of, let's say the stock jumps 20 or 30% and they sell it? I think a lot of people have a lot of tax burdens they're not realizing. Would you agree with that? Or what are some ways that they could actively get around that?
Yeah, I mean, with capital gains and selling stock, absolutely. When you sell it, you're going to have a pretty big tax hit. And I would say just be sure when you're selling it, which you shouldn't sell it, by the way. You should keep it to build long-term wealth. But if for whatever reason you're going to do that, just make sure you keep enough withholding. I mean, make sure you keep 20, 30% of however much you sell, and just write a check to the IRS. I would do it same day, to avoid forgetting about it or having any problems with it down the road.
I like it. Anyone else have any questions for RC? This is interesting. Thanks for coming on.
Yeah, no, thanks for having me.
Well, while we wait for a few questions, what are you doing in your life, having seen all these tax returns and seeing a lot of people in the real estate industry? Like, what are some things that you see for the standouts? Because that's what, anyone can lie or bloviate about themselves, but tax returns don't really lie. I mean,
They
that's
hopefully don't
really,
lie. You can go to jail if they do. So
I mean, that's really the ultimate report card, right? Let's see. What are some write-offs most people don't think of? That's the next question.
what are some write-offs most people don't think of? I would say, honestly, it's usually the write-offs people do think of that are the biggest ones they have. Most agents that I see, the write-offs, I mean, obviously their car. A lot of them do advertising. And then you have like desk fees, E&O. I'm trying to think like affiliation fees, MLS fees, like Supra fees, keys. It's usually kind of the same thing. So I'm trying to. I know what your question means. Like, is there something a lot of people miss, like that they should do? But usually, in all truthfulness, it just comes down to like doing the basic things well, and you're really tracking like the big basic expenses in your business.
Is it better to hire a CPA or a bookkeeper?
They're two totally different functions. Bookkeeping is the tracking of money. CPAs typically do tax returns and do tax strategies. If you are making decent money, I would hire both. If you're just making okay-ish money, you could probably do your books on your own through like QuickBooks Online, self-employed. QuickBooks Online, self-employed is like $20 a month. It's really good for sole proprietors, like real estate agents. I've set up all my real estate agent clients on it, and it works really, really well. But down the road, yeah, hire a bookkeeper to just keep on top of all of your books for you, and then also hire a CPA to do tax strategy, tax planning, and then ultimately the tax returns itself.
Interesting.
Yeah,
Here,
and then
Anne
Anne,
has a
hey Anne, hope
question.
you're having a good day. She asks, what are the write-offs for an electric car? Is it different for tracking mileage? No, it would be exactly the same. The only thing I think might be different about electric cars is there might be some kind of tax credit for it, like a personal tax credit. I'm not that familiar with that. And I don't know, maybe that expired already, come to think of it. But other than that, it would be written off exactly the same way as your, as a regular car.
So the mileage is what, 55 cents a mile for business? Is that still the same?
Something like, it's right around there. Yeah.
And is that the only thing you can take as far as your individual vehicle write off, or?
There's other things you can take, like you can theoretically track your depreciation on the car. You can also track like the gas, or I guess, yeah, like if you somehow allocated out how much you spend on electricity for an electric car, you can do all of that. But honestly, for most agents, it's really just simpler to use something like Mile IQ, an iPhone app, or use the QuickBooks mileage tracking app and just write it off that way. And then typically with the agents I see, even if we were to try to go like allocate out, like, okay, you use your car 74% for business and you spent this exact amount on gas, even if you go through all that extra effort to try to allocate it out, it doesn't usually save more money than just doing a straight mileage write off.
So Ann says, I got a personal tax credit, but it depends on the manufacturer if it's still available.
Oh, cool. Nice.
Yeah, I guess that's getting more. But I think a lot of people where they screw themselves, especially as you start acquiring more and more real estate, maybe you can touch on this, is they try to write off a lot so they pay the IRS less.
Yeah.
But if you're in the process of buying real estate or borrowing money, you almost want to pay them more so they have the ability to borrow more. Can you touch upon that?
Sure. That's a great point. Yeah, I talk with people sometimes like where they think that like dealing with the IRS is like a blood sport of trying to sneak as many deductions across the finish line as possible. It's not worth it. Like, number one, it's a mindset issue. Like, you should be focused on abundance, not just trying to save pennies, right? Save money where it's a legitimate way to do it, but don't try to like, sneak away to like pay less. And I can tell you honestly, like I've represented people in audits and they suck. Like if you get flagged for audit by the IRS, you're going to be sending them bank statements, you're going to be sending them invoices, and truth and justice won't necessarily prevail. Like maybe you do have legitimate write-offs, but they still flag it and they still say no, and you have to fight them. It's not worth it. And the IRS is not stupid. Like if you have all these write-offs that don't really make a lot of sense, your odds of getting audited are very high. And if it happens, it's horrible. But don't do it. Don't just try to save a little money on taxes to get audited. Pay some, accountant or tax attorney 20 grand to fix it for you, and then ultimately have to pay all those taxes plus accuracy penalties and interest back. And yeah, I mean, the other thing to your specific question, Michael, is absolutely like, if you're trying to look broke on your tax return, you're not going to be able to get a loan to invest in real estate. Or I don't know, maybe you could get like a hard money loan or something. But if you want like a regular loan and you're broke on paper for tax purposes, you're really going to hinder yourself. So I mean, even for myself personally, I mean, I'm aggressive in anything I can legitimately do to save money on taxes, I do. But by the end of the day, my income is my income. And I'd rather have it be higher, not only to stay out of trouble, but also to be able to borrow capital to invest. So yeah, don't get too tricky and don't try to like sneak something out with these guys for the reasons that I mentioned.
Now, can you talk about what the IRS flags and what type of people get audited and some of the, the percentages, et cetera?
Yeah. So the biggest thing for self-employed people is the deductions they're taking don't really make sense given their situation. So if you're making $50,000 a year gross as a real estate agent and you have $30,000 of 30,000 miles you're writing off, that doesn't make any sense, right? Because it's, for you to have only made 50K, how many houses would that be, Michael, to sell like 3 or 4 or something like that? Not that many.
Depends on the price point, right? Yeah.
Yeah. But in general, it's not a high level of production, right? But you have these humongous mileage write-offs. Like it doesn't logically add up, right? Anything where it's like your expenses are really big compared to what your income before expenses was is always going to be a red flag. Now, I mean, if it's legit, like if you're starting your business, right, and you have a lot of write-offs because you're getting started, that's cool. But I mean, if you're just perpetually in business, like with a very low profit margin, they're going to start asking questions, right? And you need to ask yourself too, like if you're really not making, if you're making as little money as you're claiming, how are you even affording to pay your bills? And I mean, the IRS is going to ask that exact same question, and then you're going to get audited. So that's the number one place I see people get flagged is they have like these massive write-offs. They're taking losses in their business every year. And it just doesn't make sense, right? Like you don't need to know anything about taxes to know it doesn't make sense that if, you're claiming you make 10 grand a year because you had $90,000 of write-offs against $100,000 of income, like how are you even surviving, right? So don't do that kind of stuff unless you can truly document it. And that is actually what happened in your business.
Now, what happens after they do flag you and you are getting audited? What happens? Can you walk us through that briefly?
Yeah. So what happens is they basically will send you a list of stuff that they want, and they'll say, send us your bank statements, send us your proof of everything or certain line items in your return. And then you have to go dig all that stuff out. You have to go find it. Another important note is that with audits, it's usually a year or two after you filed the tax return. So you're not going to remember this stuff because it's not fresh on your mind. So you're going to go dig through all of your records to see if you can find them. Half of them are going to be missing. It's going to be frustrating. You're going to be pissed off and upset at the world for a while. And then they're going to look at it and they're just, usually they kind of take like a hard approach and they just shoot stuff down and say, no, we're not going to let you do that. Because they're overworked and they in their mind, like they've heard every excuse under the sun. Right. And so you got to go back and forth with them. They're going to come back and say, okay, now you owe us this much more in taxes you didn't pay. But not only just taxes, but also penalties for understating your income. They charge you another 20% in what they call an accuracy related penalty. And they can be more than that, but it's usually 20%. And then if you disagree with it, you have to appeal it. And then if you fail on appeals, you have to go to tax court and hire a lawyer to represent you before a judge. So, I mean, you're in a world of hurt if that happens.
It's not worth it. So basically, step by step, what you recommend a lot of these agents listening in is, number one, increase your income. Based on what you're seeing, what are they doing to increase their income? They're growing their teams. They're growing their niche down. They're being more intelligent about monies put out as far as commissions brought in, or what are you seeing as far as the numbers?
It's exactly that. You have to have your own mountain to define and stand on top of. I mean, Michael, you could talk way more about that than I could, but I can just tell you the guys I see that are making a lot of money, they have a niche or they have a team, if not both. So you got to focus on that. Really go find a winner, like find someone who's crushing it in this business and learn from them. And that's, Michael, that's one of your big pieces of advice you always give people is like, if you're fresh and you want to learn how to succeed, go find someone who's already kicking ass and just copy them and add value to them and learn along the way. That's
the leader. We all have our skills. This is what I tell a lot of these agents, and you guys chime in if you'd like to. But I think we all have these unique things that make us stand out, that make us great at what we're doing. And being able to share that and monetize that with friends, with colleagues, with partners, with agents is really what defines success. And being that island mentality. I mean, when you see people that have problems, are you seeing they're kind of an island socially? They're not really promoting themselves. They're not going out and touching people, or what are you seeing as far as the paperwork trail?
I think like what I see is they have this real like dip their toes in mentality on business. So they're like, okay, I'm going to try this. Oh crap, it didn't work. I spent $300 on Facebook ads. It failed. I quit. I'm not going to do it. Oh, I'm going to try to go to a couple networking events. Oh, I didn't get any leads. See you later. So they don't like commit and go all in. Like the agents I talk to that are really successful, they seem to have like a real specific idea of what they do and how it is they do it. The other ones are just kind of like trying out a bunch of stuff. And I think like a lot of the less successful ones, like they place like more of a credence on kind of like dated techniques, right? Like they're not using a lot of like technology and, they're like, oh, I'm going to, I don't know, drop off gift baskets at people's house and stuff like that. I mean, maybe that works for some people, but it's really like a dated way of thinking. I think all the tech that we have, like on Instagram, Facebook, Snapchat, all that stuff is a real asset. And I don't know, a lot of agents, particularly like maybe older ones, like maybe who didn't grow up with this technology, don't use it. And I think it really hinders them.
Now, here's a question. As far as correlation between income and presence, are you seeing the people that have like the highest income have like really strong web pages, good SEO, or are they just... So
I mean, the ones that are crushing it, I mean, the amount of money they spend on online advertising is through the roof. I mean, I have a client, they spend like $100,000 a year on paid advertising, but the guy has a team of agents to work under him and, he's everywhere, at least online from what I can see.
And
They're
paid
not afraid to use that.
advertising for that 100K, what type of things is he or she investing in?
Like as far as like rental real estate and all that, well, that's the problem. Like they don't. That's the part where they're screwing up and why they have a big tax problem and limited to technically negative net worth, unfortunately.
No, but
But
what I was asking, I mean, to, them being so successful as far as SEO and marketing, where are they allocating those dollars that you can see on a paper trail? Is it Facebook advertising? Is it CRM? Is it mailers? Like, what do you see that they're doing based on the
I've
trail?
seen a lot of like Zillow leads. I see that pop up quite a bit. I see Google, but I won't pretend to know that well enough to like give you advice here because I'm not really sure exactly what they're doing. But I know I see Zillow pop up quite a bit, and I know I've seen like Google paid ads as well.
Interesting. Interesting.
Yeah.
Anyone else have any questions for RC while we got him on here? Well, while we wait for a question, I mean, we've been
Yeah.
friends for forever. I mean, probably what, 17 years now,
A long
18
time.
years. And our net worths have grown together, and our mindset and business has grown together. If you could leave the audience, obviously this podcast is called Millionaire Brand Creation. And what we're trying to do is help everyone become millionaires and beyond. Some of us already are, but how do we then become decamillionaires, centimillionaires, billionaires? What are some advice that you can give the audience listening in to really take their business to the next level? And once they do, prep for the IRS in their future?
I think the biggest advice I would give is, number one, learn from people who have already done it. But I would say another thing is really have more of like a tolerance for failure. Like I think a lot of people just give up too soon. Like I was mentioning the example of people that quit on ads, in a very short period of time. I mean, like even in my business, we do a lot of paid ads. I probably spent like $80,000 on them before I really got them to work well. And it would have been really easy to quit and just say, this is stupid. I don't want to do it. But when you figure it out, not that you ever have it all figured out, so to speak, but when you start really getting good results for it, it takes a lot of time and a lot of work. Invest in coaching and invest in help. Be willing to spend money for people to tell you how to do a good job. Like one thing that we're doing right now is we're trying to expand into paid YouTube advertising in our firm. And, I just am like, I don't want to waste my time on this. I went and I found the best guy I could. And, we spent, a 5-figure investment and learning from him how to do this. It's not worth sitting around, like you said, in a little island, Michael, and just trying to figure it all out on your own. Don't give up easily and invest in learning from people who are the best at whatever it is you want to be good at.
Veronica Sullivan has a question for you.
Yeah, Veronica, she says, will online bank receipts suffice or do we need to keep paper receipts we receive from retailers after making business purchases? I would say online bank receipts are fine. In general, just having it in your bank statement is okay, as long as it can be readily identified as something that's a business expense. And that's another reason, too, that it's a good idea to keep your personal and business finances separate. But anything like maybe where it's not easily discernible, like what it is, like if you have an order from Amazon, right, that could be personal, that could be business, keep the receipt like as a PDF on your computer. And then if it's ever questioned, you'll have that ready to go.
That's a good question.
For sure.
So you're saying to truncate the amount of time from go to zero to hero, spend a lot of money and putting yourself next to people that have already done what you want to do and learning from them to implement in a quicker time.
Yeah.
And how much do you think you spend, let's just say monthly, on advertising for your business, out of curiosity?
Probably around $5,000 a month, which isn't too terribly much, but we are trying to grow right now. So that'll probably continue to increase down the road.
But over the course of your business, you paid what, 6 figures in marketing expense to grow
Easily,
your.
yeah.
Interesting. So really, you got to get out there and really start, hitting the streets, so to speak, and meeting people to see what they're doing.
You got to promote one way or the other, paid, organic, the way we're doing it now, Facebook ads, Instagram stories. I mean, you got to promote one way or the other. You got to always be out there promoting yourself or
you can't
nothing's going to come your way.
Yeah. And also have people that are smart in the money space and the tax space. I mean, what people don't realize, and I'm sure you get this all the time, is they don't need you until they need you. And when they
Exactly.
need you, you're the most important person in their lives. But most people don't realize it's almost like a doctor visit, right? You want to make sure you have all the knowledge up front so you stay financially healthy the years to come, as opposed to, oh shit, I owe the IRS 100 grand, which a lot of these agents do, as we know. They don't take quarterly taxes. They're not paying the IRS and the state governments regularly. So by the end of the year, they basically hose themselves. I mean, I'm sure you see it all the time.
Oh, for sure. Yeah. I mean, and I think it's because like real estate, like what makes you a good real estate agent isn't what makes you a great accountant, like just by your trade. So like real estate agents are very outgoing. They're hustlers. They like more creative type stuff. They like more of the soft skills. Accounting is like, it's all numbers and like repetitive, mundane tasks. I mean, it sucks for lack of a better word. So if you want to go crush it in real estate, you don't have no natural inclination to want to do anything in accounting. And I get that. Like, it makes perfect sense. But it's just important to recognize that bias in your own mind and find a way to make the accounting work anyway, even if you really don't like to do it.
So if they were starting from scratch today and they listened to this and this inspired them, and let's say they're making $50,000 to $100,000 a year, go through 3 steps that they can write down and take with them today that they can do to help them in future wealth creation and avoiding difficulty from the IRS.
Yeah, for sure. First thing, go download or sign up for QuickBooks Online right now. It's $20 a month. It's really easy to use. It's one of the best quick bookkeeping software I've seen for small business, self-employed people. Sign up for it, download it on your phone. You can track your expenses. You can also track your mileage on the app. It's really cool. Like it automatically tracks, when you start driving. Number 2, get a separate bank account for your business. Don't mingle. Most agents I talk to just mingle everything. Don't do that. Keep everything separated out. I would say also set up an LLC, to keep everything separate too. I would say the third piece of advice, if you're just getting started, focus on making more money, but make sure you're tracking it more effectively. And when you start to hit that net income of $80,000 to $100,000, then it's worth reaching out to an accountant or a CPA to talk about more tax planning and tax structuring.
And how can they get a hold of you if they want to utilize your services? What's the best way to get a hold of you, or add you on Instagram or Facebook or anywhere?
Yeah, best way, add me on Instagram, add me on Facebook. All of our business is all virtual. Like we do have an office, but our clients we work with over the phone or over Zoom. So that's the best way to get a hold of me. Add me on Facebook, add me on Instagram, and then we'll set up a time to talk. And, if there's any way I can be of service to you, I will definitely try to point you in the right direction.
Does anyone have any questions before we we got another question. Joe has a question. You want to read that?
Sure. I have an LLC, Joe says, for my REI and an LLC for my real estate team. Do I need separate bank accounts and QuickBooks accounts? I got to ask you guys, REI, what does that stand for, Mike? Do you know?
Ask Joe, what does REI stand for?
What is that, Joe? Well, I can still answer the question, I think. If you have different lines of business, you should have 2 real estate investments. That's what I thought. Definitely you want to keep track of those things separately. I talk with clients sometimes who, to their credit, like they do track their stuff, but then they put it all in one QuickBooks and it's really hard to sort through. Keep track of all that stuff separately.
So separate business, separate account, separate
100%.
book, basically, is what you're saying.
Yeah.
Okay. All right. Well, I really appreciate your time as always. And
thanks for having me on.
Do you want to leave us with a quote or something that we can use as a tagline for today's meeting?
Yeah. Don't cross your least favorite uncle. You will live to regret it.
Oh boy! Well, big thank you to RC and your friendship and your tutelage, and a big thank you to Matt Culhane. He's in Denver right now for putting this on. And thank you guys for your questions. If you have any questions that RC or myself can help you with, feel free to DM us on Instagram or Facebook, and feel free to reach out. He's a great knowledge base, and we're here to help. Thank you guys, and have a wonderful day.
See you guys.
Bye bye.